Hello traders, I hope you guys are doing well. It's me, Adnan Rahman, and this is my first webinar for Errante. I'll be speaking for Errante as a market analyst. Okay, so the webinar for today, it's kind of an important one, but I'll try to take it on a very softer note because once you grab the concept of this liquidity grabbing, then you will, you'll be able to understand what the charts are telling you. Okay, so I'll just give you a few of what we will be doing. Okay, and then gradually, slowly, we will take the lead. Okay, first of all, this is my introduction, Adnan Rahman, market analyst at Errante. And now this is the webinar in English, and later on I'll be having webinars in Urdu as well. Okay, this is the disclaimer about Errante. You can just pause the screen and you can go through it whenever you are easy. Okay, so what we'll be doing is you'll be understanding the concept of liquidity, what the liquidity itself means in Forex market, and then we will see what are liquidity grabs and then what does smart money does in this context. And then we will use these all context into the MT5 platform and some trade setups of what we can see easily. Okay, and then if you have any questions, you can email me, message me, ask support, whatever. Okay, so I'll just show you a glimpse of what we'll be doing. Is the first one is the basics of what it is, and then second one is like what is the grabbing basically, and then later on we will go through all of these animations and then we will understand on our chart as well. Okay, so now let me start the webinar. I hope you guys are available and you can hear me very well. If you have any questions, you can message me, ask me during the webinar, or email me. I'll be more than happy to help you out. And then I can also provide you with these PPTs, okay, if you want to study later on, and I'll give you the access to the indicator as well. Okay, so now without wasting any time, I'll start with what this word liquidity means. Okay, this particular slide over here, this is focused on the terms. Okay, because until unless you don't have a view of this terms, then you won't be able to understand all of this activity that we are doing. So first of all, main thing, the forex market is known for being the most liquid in the world due to a daily trading volume that exceeds 7 trillion. So this forex market is the most liquid market, and the volume traded, it exceeds 7 trillion. A couple of years back it was like 5 trillion, but now it's increasing and increasing because it is the most liquid market. Okay, what you need to do is you need to keep a view or keep a brief sight on this word liquidity. Okay, liquidity or liquid zones. Okay, whenever you listen this word or see this word, you need to have an extra focus over there. Now, let's see what this liquidity actually means. Liquidity refers to the ease with which an asset can be bought or sold in the market without affecting its price. Okay. In other words, it's the easiness in which by which you can buy or sell any asset. By asset, it's not cars or something. It's obviously our symbols, the tradable symbols that we do. So it's a ease basically. Okay, there is no trouble like the olden days when you had to like sign a couple of papers just to buy a few lots. Okay, it's not that thing. Now the ease has been brought into this market. Okay, and now what are the keys, what shall be done, or what is the main function of this one? In financial markets, higher liquidity means traders can execute large orders quickly and at stable prices. Okay, the main hurdle in the past was to have a good and effective trading in time. Okay, so that thing has been resolved while having this liquidity in the market. Okay, now I won't touch the major concepts or the more advanced concepts that who brings the liquidity in the market, how it's bought and how it's used and all that stuff. I'm not going for that one in this webinar. The only thing you need to focus is that the forex market is the most traded volume or most liquid volume, and liquidity means the ease of trading. You can easily buy or sell, and then what it does, it's give you a sense of ease and security that you can place your trades on. Okay, this is what you need to keep in your mind. And then what are the benefits? The spreads are tight and the slippage is very low. I mean, in easy words, if you are a new trader, there are less chances of errors. Okay. And then at last, again, as I told you, you need to focus on this word liquid. So this is the main thing you need to keep your eyes on. Liquid zones. Now, what these zones are? Traders focus on price zones with high trading activity. Okay, this is what you need to keep in your mind. So wherever there is a high trading activity in the market, traders are focused to that level. Okay, they are focused to that level, and what they call that level is, they call it liquid regions. Okay, now there are many words for this one, many synonyms for this one, like liquid, liquid zones. Okay, or you can say region, or even in an easy term, it's called liquidity. Okay, there are many words, but it serves the same purpose. Okay, so now let me explain you in one word or one liner that high trading volume is, the one of the characteristics of the forex market. And then there comes liquidity, which gives you the ease to buy and sell an asset, okay, easily, with ease and with tight spreads and less chances of errors and low slippage. Okay, and then what traders want to see is, they want to see a high volume area, which they can call liquid regions. And now later on in the upcoming slide, I will explain you why I'm focusing on this liquid region, what it basically means. Okay, if you have any questions for here, you can let me know. Okay, so if you have understood the first slide, you have done a very good job. And I hope you will, the things down the line will get quite easier. Okay, the second one. This is the last slide, that definition based slide. After this, we will come to the main prospect of how we can deal with this liquidity and what it actually means on a chart. Okay, and then we will go to MT5. So now, as the liquidity stuff is out of the way, now we have to come to the main concept. What is this grabbing? Okay, so liquidity is out of the way, and now we will look at this liquidity grabbing. So let me start with this first one. That's why I've used these animations over here, because I want your attentions over here. Okay, what liquidity grab means? A liquidity grab, okay, involves large players manipulating prices to trigger retail stops. Okay, first of all, even a part of this webinar, what you need to keep in mind, you need to focus or follow, okay, the footsteps of large pairs, not the small ones. Okay, you need to focus on this guy, not this one. Okay, you need to focus on the movement of this large pair. So what this large guy does, okay, what he does is, the liquidity gap involves large players manipulating the price. What this guy loves to do, he loves to manipulate the price. Okay, and what this manipulation means, now we will see in this one. Okay, what are the techniques of manipulation? Techniques include false breakouts and unexpected sharp price movements, okay, to mislead traders. So what this guy will do is, okay, like, see, you are like going in a range towards the upside, okay, and he will make a massive movement towards the upside, and then he will once you have bought over here, okay, he will push the market towards the downside. So this is that side of sort of manipulation that guy will do, that you will make your mind, okay man, I have got this range breakout and then I have seen a movement towards the upside. There will be a fear in your mind that I lose this uptrend. Okay, so don't worry, we'll go on the charts and I'll explain you this in very detail. I'm just explaining you right now. So I'll lose this uptrend once you go into a buy side, and then this man drops the market. Okay, there are techniques. For now, in an easy tune, this is what happens. So this is the technique that this guy uses. And if you have a brief view and you have an understanding of this technique, and you can find this technique or this activity on chart, then you can have a good trading strategy for yourself. And after that, what happens to us? Like, see, we don't have that kind of a money. We are not hedge funds, we are not banks. Okay, we are retail traders. Me, you, all of us, we are retail traders. Okay, what happens to retail traders? Retail traders offer sudden losses, okay, due to increased volatility and sudden market reversal. So what happens is that this guy, when he, this, let me get this out of the way. Okay, see what happens is that the market is in a range, okay, over here. Then comes this big guy. I have named him as L, okay. And then what he does is he pushes the market towards the upside. And guys like me or you, retail traders, are the retail traders. What we do is we think, okay, man, now the market has gone towards the upside, and now I'm going to buy. Okay, what happens next is this guy over here, okay, this big guy, what he does is pushes the market downwards, and then we are in a loss. Okay, so what happens over here, this retail trader is usually in a loss when this type of thing happens. Okay, so now what are the identification signals? I've already explained over here. Signals include, okay, sudden large volume spikes. If you have a view of what volume is, you can see massive volume spikes. Like for example, usually if the volume is this one, you can see big volumes over here like this. Okay, so this is if you have a massive volume spike, okay, or massive price movements. If your price is just overall just like, it's in a range and then it suddenly shoots towards the upside or downside, then this is the thing you can understand this thing is happening. Okay, so this is the way how you can identify it. I'll explain you in the other slides as well. Okay, and prevention strategies. Okay, now if you have understood what this guy does, how he does, what is the impact, and you know how to trace it, the main thing is how to prevent yourself from all of this. To understand this prevention, you need to keep a stop loss, okay, because you know what is stop loss. It's just a level, that in case of a losing trade, you will not suffer more losses, more than the amount you have already set for that stop loss. Okay, and then leveraging, you can just effectively use your leverage. Don't over leverage yourself, because over leveraging can be a little bit disturbing for your account. Okay, so these are the things that this is the whole structure of what this guy does. Okay, this liquidity grabbing guy, you consider this as a guy. If you will consider him as a guy, then you will be able to understand his process. Okay, so now getting this out of the way, here comes the main part. Okay, I want your attention over here, please. What happens over here is, give me a second. What happens over here is, like, see, if you have this, if you have your trading chart and you have a range type of scenario, okay, a range type of scenario, and then suddenly you can see over here that you have a pivot high. Okay, what is a pivot high? Pivot high means a candle that is higher high, okay, higher high, okay, and to the left there are low candles and to the right there are low candles. So this candle over here, this is your pivot candle. Okay, in other words, this is your fractal as well. Okay, you can just go into the indicators in your MT5 and you can use this fractal as well. So what happens is that you have been able to find out this pivot or fractal, and then in your mind, okay, in your mind you can just draw a horizontal line over here. Okay, you can just draw a horizontal line over here, and you can think, okay, man, if I have a breakout towards the upside, I will move, I'll move with the flow and I'll try to buy the market. Okay, this is what usually a guy thinks. So what happens is you need to find your resistance zone. The first thing, you need to find your resistance, or obviously supply zone if in the other case scenario towards the downside. Okay, I'll be using this bullish type of scenario where we have resistance zones. So that is what it can be easy for me to teach and for you to understand as well. So what happens, you have got this resistance zone over here and you have drawn a horizontal line above this resistance zone, resistance zone, sorry. Okay, so what happens next is, I have told you about this liquidity. Again, focus on this one. Now what happens is, once you have this range over here and you have got this resistance zone over here, everything is going well. Then now let's see what is the next process, or what is the next thing that traders and this smart money or this huge banks or this liquid guy, okay, like let's call him liquid guy, okay, LG. okay, for easy reference. So what this LG does is, now he see what he will do is, traders focus traders focus on price zones, okay, with high trading activity, okay, to make trades in liquid regions. Okay, so what happens over here, now try to understand, this is a resistance zone over here. Okay, so a guy, just for example, understand this, a guy who has gone short over here, short means sell, okay, okay, he has his SL, stop loss, placed in this area somewhere. Okay, that's why this is a place of liquidity for the markets, where there are orders in the market. They can, the orders can be stop losses, the order can be market orders, it can be pending orders, it can be panic orders as well. I'll explain all of this in the upcoming slides. Okay, so this is a zone where there are orders resting. Okay, so resistance zone over here, and this is an SL zone or order zone. So the proper word to understand this zone over here, it's liquid region. Okay, liquidity zone, liquid region, or liquidity pool, you can name it whatever you want. Okay, basically this is the place that you need to focus on. Okay, now let me take you to the next slide, and then you'll understand further. So what this is, this region is, it's a pool of liquidity, okay? A pool of liquidity. And what this liquidity is, it's the area of your stop losses or pending orders, or whatever you can say. See, now I've written this explanation over here. The market seeks out pool of liquidity where traders have placed stop losses, okay? SL, the guy over here who was short over here, he has placed his stop loss, okay, or pending orders, example, around a key support resistance area level, okay, some pending orders over here, pending orders over here, okay. And now this pending order, see, until now we have just read about this stop loss over here, okay, the guy who has sold over here and has his stop loss over here. But what happens to the guy who is waiting for this breakout, as I said earlier, so that guy is also waiting for a breakout at this level, that if he gets market at this level, he will go towards buy. Okay, so see, right now we have this SL levels also, and the traders who are waiting to go into a long position after this breakout level. Okay, so what I'm trying to say is that this area is an liquidity pool, okay, or an area of liquidity, or in easier words, this is a place where there are massive amounts of orders, and this smart money wants to trade these orders and use these orders to enter or exit into its position. Okay, so keep this whole scenario in your mind. Okay, and then what happens next? What we read until now is this pool of liquidity. Okay, and now what this concerns, what it contains, is stop loss orders. Okay, buy stop and sell stop orders. Okay, buy stops and sell stops, whatever. In short, it's a type of an order. Okay, we don't need to go in detail. Okay, market orders, if the guys like me is like just waiting, and it's his job to look to the market, and then he sees, okay, market has gone up and then there has been some candles over here, so I can just hit the button to buy. Okay, even I can go for a sell, anything. So like market orders, this is called a market order. And then panic selling and buying. So what this panic selling and buying means, like, see, like fear of moving out. Okay, if I am a seller, okay, I'll panic over here that the market is going up, I may face loss. Or even if I am a buyer, I will have a fear that the trend is going up, and if I don't enter now, I'll lose the trend. So this type of guys are known as panic selling or panic buying, who just hit the gas in no time. Okay, so the main thing is, this is the area, okay, above the resistance, okay, where we can name it as liquidity pool, LP. I hope I've explained very well. Anyways, if you have any questions, you can ask me. Okay, now comes the main part. Large institutions players, large institution players. What are these? Who are these? These are banks, these are hedge funds, okay, need liquidity. Keep this in mind. They need liquidity to execute large orders. Okay, because you know forex is a zero sum game. Okay, in easy words, let me explain you. Left hand side is equal to right hand side. Okay, in easy words. So it's a zero sum game. Zero sum game is more professional term. So what happens? These big guys, you know what we named them was like LG, okay, liquidity grabbing guys. Okay, they are banks, they are hedge funds, big guys. Okay, so they need this liquidity. Okay, they need this liquidity to enter or exit into their positions. For example, for example, no, if I'll explain you in details, you will get confused. Okay, for now keep this in mind that this liquidity zone or liquidity pool is the most important thing that this LG guy, liquidity grabbing guy, needs to enter or exit into his position. Okay, now understand this term grab. Okay, now what this LG does, what he does is they deliberately push prices to trigger orders so that they can enter or exit into their positions. Okay, for example, like this guy over here, this major bank has his buy somewhere over here. So what he will do is he will just have his orders placed over here, and he'll deliberately push the markets towards this his TP. Okay, and the TP of this guy may be SL of this guy who sold over here. Okay, so keep this concept in mind. I know these are some sort of advanced concepts, but down the line, trust me, once you have understood the concepts of this all, this will be very easier for you. Okay, so what happens over here is, keep this in mind. Keep this in mind. See this guy over here. I forgot to tell you this one. This grab, okay, what happens over here when this guy, this LG guy or liquidity grabbing guys or the big banks, they force the market towards the upside into this liquidity zones or liquidity pools. What happens is that this grab tricks traders. Okay, this grab tricks the traders. And what is the trick over here? That the buyers think that the market is going up, they take a buy position. Okay, and the sellers think that the market is going up, we need to hit our stop loss. So this is the trap that they said. Okay, the LG or this liquidity guys, they collect the liquidity. Okay, they come here, they collect the liquidity and reverse the price direction. Okay, once they hit this zone, okay, they bring into this liquidity zone, they collect their liquidity and reverse the market. See, like what happens in this scenario. See, they move the market towards the upside. Okay, they grab the liquidity from here, and now what we can expect is that they can move the market towards the downside. Keep this in mind. Now let's see what happens. See, that's what I was explaining. This grabbing is the main thing or the main tool how the market moves. Now let me explain you in one liner. Okay, okay, see what happens is the first thing was you found a resistance zone. Okay, the second thing was that you found this liquidity pool. Okay, what is the liquidity pool? It's an area or a price zone that is above or resting above this resistance area. Okay, so just a few pips above, like 10, 20, 30, depending on that particular asset that you are trading. Okay, so see, liquidity pool over here. Then what happens is this liquidity pool, it contains massive orders, the pending orders, the market orders, the pending orders, and all kind of orders. So what the smart money does is it pushes the market towards the upside into this liquidity pool, and then the stops are hit. Okay, what happens? Stops are hit. Stops of the guy who sold this one on this resistance, his stops are hit. Okay, and stops of the buyers that will hit in the next step. Okay, when the market is going up, okay, the guys or the buyers will come in. Buyers will come in and they will say, okay, the market is moving towards the outside, so we are going long on this. When they go long, what does this LG guy or liquidity grabbing guy will do is he will push the market towards the downside, and the stops of this guy is also hit. And what happens is the market is reversed towards the downside. This is the whole scenario how the market works. And trust me, this is the single or one of the most prominent strategy or formula or process that you see on your chart on a daily basis. Okay. And now let me explain you, let me give you a cheat sheet for this one. What happens over here is in terms of this buy and sell, keep this in mind. What happens is the first thing is, okay, like you have a support area. Okay, let me write it support. You have the support area, and what happens is price briefly breaks below the support area, known as fake out as well, this movement. See what happens over here. You have this this pivot candle or fractal, whatever your name is, and then you see that the price has broken below this support area, and then suddenly it has hit this liquidity pool. Okay, again I told you this word is very important, pool of liquidity or liquidity pool or whatever you name it. Okay, in other words, orders, massive orders. Okay, it hits this massive orders, and then it moves or reverses back. Okay, so this whole concept starting from here, coming over here and moving towards the upside, this is your concept of grabbing. Okay, so this area over here, one second, let me show you. Okay, so this area over here, this process is known as grabbing. When all of this pool of liquidity has been grabbed. Same thing over here. If the market is moving towards the upside and you have, like found this resistance area over here, and then you see the market suddenly moving towards the upside. Okay, keep one thing in mind. This setup is more accurate if you have massive, massive, massive volume. Okay, why? Because volume is the main thing that it shows the movement of the market players. Okay, like see, if I am trading at 0.1 lot or 1 lot or 2 lots or 10 lots, my this lot won't make a huge difference on the overall volume of the market. But if there is a huge bank or a hedge fund that needs to trade on something, whatever the reason is, okay, so when they put their entry, the price won't be moving too much, but their footprints can be seen on higher volume. Okay, because the only thing that can move the volume too much or move the price too much is this LG guy. Okay, liquidity grabbing guy, the banks and all that, because they have too much of money, they can move it. So what happens over here is, getting back to the point, we have this resistance over here, and then market is moved towards the upside. All of the grabbing is done of this pool of liquidity, grabbing of this pool of liquidity is done. Okay, and then the market reverses towards the downside. So what happens over here? Sellers over here, they are out of the market. Buyers, they are also out of the market. And then this LG guy has played his game. So this is the main thing. So what is the clue? Okay, keep this in mind. This clue, keep it in mind. Okay, look for sudden wicks. Okay, over the chart, if you have sudden wicks, okay, like say if your market is moving in a range and then you have this wick over here and then you see market coming downwards, this, okay, on a high volume, okay, it means that the liquidity grabbing is being done. Okay, so look for sudden wicks. Okay, wicks. And what wick itself mean? It means reversal, right? Okay, see this one, this wick over here, it means reversal. This wick over here, it means reversal. Okay, and sharps move against the main trend. Okay, and immediately followed by reversal. Okay, keep this in mind. This is a tip. If you cannot go through this all process in your mind or while you're looking at the chart, this is the main thing you need to follow on. Okay, now the time for question answers. If you have any questions, please do let me know, and I'll give you the glimpse of what we'll be doing in the next webinar, where I'll be explaining you about this this liquidity in further detail. Okay, Just give me a second. Okay, I hope you can see my chart now. Okay, so as an instructor, okay, the best thing I can do is like I can have an automated system, okay, that indicates, okay, listen to the word I'm using. It indicates that this XYZ strategy has been formed, okay, or the XYZ indication of a particular strategy has been formed. So for that purpose, I have like designed this tiny miny indicator. It's not a tiny miny, basically it's a huge one. Okay, sorry. So right now, I won't be explaining you each and everything of this indicator. Later on over the webinars, I'll be explaining you each and every one. But right now, for this sweeping stuff, what we will do is I've switched on these two buttons over here. This IB sweep, okay, and these are this IB for the sweep for the H8 and H12 and daily. What happens is that if there is a setup over here, I'll get to know. Okay, now let me explain you. Look at this. I am on the Australian dollar chart on the H1 time frame. This is an H1 time frame. I hope you can see it very well. Okay. And what happens over here is just let me get my, just give me 1 second. Let me see if I can have my pen working over here. Just give me a second. Let me see if I can get my pen working. No, the pen isn't working. I don't know the reason. It's not working on this one. Maybe I have to bring this over here and see. I mean, it's going on my other screen. I don't know why, what's the reason of this one. Anyways, guys, let me explain you. Let me explain you this way. Maybe I can draw. No, it's not coming. It's going on the other screen. Okay, let me get this out of the way. So what happens over here is, like, see, what I'm doing right now is that I am tracking the liquidity grab from an H8 chart, okay, the 8-hour chart into the H1 chart. Okay, I'll repeat again. What I'm doing is I'm tracking the liquidity grabs of H8 chart, something that has happened on H8 into the H1 chart. Okay, this is important. For example, as I've told you, let me explain you. As I've told you that I'm, like looking at the H8 chart. Let's go on H8 chart. Let me zoom in. Okay, so now you can understand this. See, this was a candle over here, and then we have already broken this support level over here. Let me show you. Okay, the support level is already broken. Okay, and then we see a stall over here at this area, and now this is that wick we have been talking about, like on a support zone. If there is a wick and the volume is also higher, it's not low as compared to these ones. See, the volume is considerably higher. What happens in that case? You can expect the market to go and grab liquidity. Okay, so what happens over here? We could expect the market to touch these highs. Okay, so this is something, it's a very important concept. This is what I'll be explaining in detail, in a very, very, very good detail in the next upcoming webinars. So for now, you can understand this one, that big bearish candle on the H8, it's this one. Okay, market moving towards the downside, and the other candle that has grabbed the liquidity, it's this one. Okay, so what happens, it has, this was a previous support area, you can say. Okay, and then we had this wick over here, and in this area somewhere you can expect that liquidity pool. Okay, because that is something we obviously we cannot see, but we can understand that this might be the liquidity pool. Why? Because there has been a reversal and this huge wick over here. After that, now what we can expect is that once the grabbing is done, this LG guy or liquidity grabbers, what they will do is they will move the market to the other direction. Okay, other direction. And what place? That place is, you know, this first candle, at least the 50% of this first candle. Okay, so what happens is that the market was moving here and there, and then suddenly there has been movement towards this high, which has, you know, it has covered this 50% level, and then we are again moving towards the downside. This is just one example of liquidity. Okay, there are many other examples. For example, just let me show you this one, you know, because when I'll be explaining you all of this in the next webinars, you must have a view of what we are going to see. For example, this one. Okay, like, come over here. Okay, see, this is another graph that has happened today. Like, this was the high of the previous H4 candle. Okay, so these areas are H4 candles. This one is H4. This is the H4 candle. This is H4 candle. So what happened over here is that this was a resistance area. Another candle came. It just went towards the upside. Okay, it has broken this resistance area, and over here there was liquidity. You know, liquidity pool that I have explained you, and then the market moved towards the downside. Okay, all the sellers over here were stopped out. The buyers over here on the smaller time frame, they took the buy position and the market moved downwards, they were also stopped out. Then the panic sellers and panic buyers have also come into the market, they have also stopped out, and now the market has moved towards the downside. This is what happens. Don't worry if you have not got the concept on this chart. Don't worry, I'll be explaining you in detail step by step as I've made the previous animations. Okay, so liquidity grabbing is the main thing that you need to focus on. And if you want this software, okay, it's totally free. We never charge anyone. I never charge anyone. This is my product. I never charge anyone. Okay, and I never will. It will be available for you know, our clients who are working with our broker only. Okay, the main part is only. So what happens is that you can, you know, like, have your dashboard over here. You can understand, okay, where the grabbing is done and all that kind of stuff. Okay, guys, now if you have any questions, what you need to do, if you have any question, any type of question regarding uh, okay, because these are the next ones now, next slides in the next, for the next webinar we'll be doing. So if you have any question, what you need to do is you can email me, you can contact the broker, you can on the support, obviously support is the email, you know, every broker has one, so you can ask them. Okay, and if you want to get added to my WhatsApp group, you know, the channel community, sorry, so all required is to be an Errante client. That's all. No charges, nothing. And you know, over there I keep on explaining the fundamental analysis and all that type of stuff. Especially follow the Facebook page, okay, and the LinkedIn page, and the broker. Follow the broker. Simply follow the broker, and then you will have all of the updates over there. Okay, if you have any questions, you can message me, write me, text me, whatever. Okay, I'll be more than happy to assist you. That's all for now, guys. Meet you in the next webinar. And how to end the webinar? I mean, like, stop over here.